Hello, everyone. Welcome to today's educational webinar on the First Home Savings Account, or the FHSA for short. Today, I'm going to guide you through the ins and outs of this incredible saving tool that is here to help you make your dream home a reality. Today, we're going to unlock the potential of the FHSA and discover how it can help you save for the down payment for your home. So, sit back, relax, and let's dive into the world of the FHSA. So, a little bit about me. I'm Blooming Umoren. My friends and fans call me Blooming, my money coach. My background is in economics and accounting, and I also have an MBA from the University of British Columbia on a full ride scholarship by the MasterCard Foundation. I enjoy coaching on everything that has to do with money, crypto, and stock investing. Note that this webinar is for educational purposes only, and nothing in this presentation is financial advice. Okay, so let's jump right in. So let's go through the table of content. What are we going to cover in this webinar? Number one, what is the FHSA? The eligibility, how does it work? Contribution, we're going to look at an example of a contribution, okay? Number five, we're going to look at how can you claim this on your taxes. Number six, how can you use the FHSA as an investing tool? Number seven, withdrawals from your FHSA. Number 8, we're going to compare the FHSA to the RRSP home buyers plan. And number 9, what are some of the key things that you need to know about the FHSA, including transfers? And at the end, we're going to have Q&A. Okay, so let's jump right in. So usually before we get started, I do tell my audience or my student, please get a notebook, a pen, and have tons of questions, okay? That is going to help you assimilate whatever we're going to be talking about today. And also it's going to help you in your home buying experience, okay? So what is the First Home Savings Account? The First Home Savings Account, or FHSA for short, this is an account that was introduced by the government of Canada recently, and this is a tax-free registered savings account. This account is here to help Canadian residents to save for a down payment for their first home. So when I say Canadian resident, you can be a Canadian, you can be a permanent resident, you can be a worker. The most important thing is for you to have your social insurance number and you're paying taxes, okay? Like literally you work in Canada or you have a social insurance number in Canada. Okay. And number 3, it combines the benefit of the RRSP and the TFSA because any withdrawals from your FHSA is tax free, and also it is tax deductible, meaning that when you file your taxes the following year, it reduces your taxable income. So it combines the benefit of both the RRSP and the TFSA. Again, the FHSA, any withdrawals from this account is tax free, and also it offers tax deductible benefit. Next, to be eligible for the FHSA, you must be a Canadian resident, meaning you must live in Canada. Okay, you might be a permanent resident, a Canadian, or a worker. Okay, number 2, you must be 18 years or older, and number 3, you must be a first-time home buyer. It's also important to know that what the government considers a first-time home buyer is somebody that has not owned or occupied a home in this current calendar year or in the preceding 4 years. Okay, I'm going to repeat that again. A first-time home buyer is somebody that has not owned or occupied their own home in the current year or in the last 4 years. Okay. Next, let's talk about contribution. You can contribute up to $8,000 annually into your FHSA, and the lifetime maximum contribution to the FHSA is $40,000 per person. If you have a spouse or a common law partner, each of you can contribute separately to your FHSA. Okay, so you can take advantage of it, meaning that both of you each have $8,000. So combined, that's $16,000 per year. Okay. And also, it's important to know that any unused contribution can be carried forward into subsequent years for a maximum of $8,000 per year. Let's look at an example to better understand how contribution works. Okay. So here is a simple table. You can look at this and you might feel, oh my God, this is really, really overwhelming. Don't worry, I'm going to explain this to you, okay? So let's start from this first column. So we have year one, two, three, four, five. The next column, we have the FHSA contribution limit per year. So as I said in the previous slide, every year we are allowed to contribute up to $8,000 into the FHSA for a lifetime maximum contribution of $40,000. The next column, we're going to look at, say, for example, now, first year, you decide to contribute $5,000. Okay? Once you contribute $5,000, let's say 2023, you contributed $5,000. Now you still have unused contribution of $3,000, and that is $8,000 minus $5,000. Okay? So you have unused contribution of $3,000. This $3,000 can be carried forward into subsequent years. Okay? So for the first year, the amount carried forward is $3,000. That means that for year two, let's say 2024, your available contribution room is going to be $8,000 plus the $3,000 that you're bringing from the previous year. Remember, every year we allocated $8,000 contribution room for the FHSA. But if you have any carry over amount from the previous year, in this particular example, we have $3,000. So for year two, your contribution limit or your contribution room is not just going to be $8,000, it's going to be $11,000, meaning 3,000 plus the $8,000 that you have. Okay. So for year two, let's now say you contributed $7,000. Now your unused contribution room is going to be $11,000 minus the amount that you contributed. So now your unused contribution is going to be $4,000. Okay? Your unused contribution for the next year, that's year two, is going to be $4,000. So you can carry forward this $4,000 again into year three. Year three, your available contribution room again is going to be $4,000 that were allocated every year plus the $4,000 from year two, meaning that you can contribute up to $12,000 in year three. Okay, so now let's say in year three you had a sign-up bonus, or you had this bonus from work, or business just got better, right? And you decide to contribute $11,000. Okay, now your unused contribution is going to be $12,000 minus the $11,000. Now you have unused contribution room of $1,000. This again you can carry forward into year four. If you carry forward into year four, that will be $8,000 plus the $1,000 that you're carrying forward from year three, making it $9,000. So let's say, for example, again, year four, you decide to contribute $9,000, meaning that you won't have any unused contribution or any amount to carry forward. So year five, you can just have only the $8,000 contribution room. Okay? This can look overwhelming or confusing, but just know that the FHSA contribution every year is $8,000. And if you don't use the $8,000 totally in a particular year, you can carry it forward, okay? Just for simplicity, every year it's $8,000. If you don't contribute up to $8,000 in a particular year, you can roll that amount over into the subsequent years and you can add it. Okay, if you have any question, just let me know in the comment section or reach out to me. My contact is displayed on the screen. Okay, so next, so for the FHSA, you can carry forward any unused deduction indefinitely through the FHSA lifespan, which is usually 15 years. You can claim your deduction on your taxes in whatever year you decide to. So let's say, for instance, you decide to make $5,000 contribution into your FHSA in 2023. you can claim some of this $5,000 or everything in the following year, 2024. Or if you want to move it to later years, you can also do that. Just know that your annual contributions can be deducted when you file your income taxes. One of the benefits of the FHSA is that it reduces your taxable income. So, next, over contribution. Anytime you over contribute to your FHSA, meaning you put in more than the government allows you to put into that account, you're going to be taxed 1% on the highest excess amount each month. So let's say, for example, now for 2023, which is the first year that you can open an FHSA, instead of putting in $8,000, you then put in $10,000. The overage, which is $2,000, you're going to be charged 1% every month until you remove the excess amount or a new contribution room is received. And usually the new contribution room is every January 1st of the following year. For example, 2023, we have contribution room of $8,000. 2024, another $8,000. 2025, another $8,000. All the way like that. But if you go above this limit, then you're going to be taxed 1% every month on the excess. Okay, so the excess amount must be removed from your account to stop accruing taxes, meaning that for you to avoid the 1% tax, you need to remove the excess amount. It's also important to note that, say peradventure you want to buy a house in the next 2 years, it's important for you to open your FHSA as soon as possible so that you start accumulating or start carrying over the contribution room. And what do I mean by that? Let's say you want to buy a house in the next 3 years. Don't wait until year 3 to open an FHSA account, because if you do that, your contribution room is only going to be $8,000. It's better to open an account as soon as possible, literally right away this year, so that even if you don't make any deposit or any contribution to your FHSA, you start accumulating the contribution room. Okay, so that peradventure you now have the money to start contributing maybe in year 2, then you still have that contribution room. Okay, but if this still doesn't make sense to you, let me know in the comment section below or reach out to me. Okay, so next, let's look at how we can use the FHSA as an investing account. I know from the name it says First Home Savings Account, but this can be misleading at times. The FHSA is not a savings account, and I'm going to say that again. The FHSA is not a savings account. This is to be treated like an investment account. If you want to just build savings for buying your home, you can just open a high interest savings account at your local bank and you can just accrue the simple interest. But if you're going to be using the FHSA for you to maximize the potential of the FHSA, it's important to use it as an investment tool, meaning that you just don't put the $8,000 into the FHSA and leave it there. No, it's better to use it to buy an investment, to buy an investment security, such as stocks, bonds, GICs, ETF. One of the purposes of the FHSA is to help you grow your money compounded, meaning that, for example, if you decide to deposit $8,000 in this first year, you can use it to buy maybe stocks. You can buy Tesla, you can buy Nvidia, you can buy Apple, whatever you want to buy, you can use it to buy so that you can take advantage of the growth in these companies. Again, nothing in this presentation is financial advice. This is just for educational purpose, okay? And it's also important for you to understand your time horizon for buying a house. If you're going to be buying a house in the next 2 months, my dear, don't buy stocks or don't invest it. just leave it with your local bank. But if you know that you're going to be buying a house in the next 2 years or 3 years or 5 years, then take advantage of the FHSA by using it to buy investment securities. And as of this recording, you cannot buy mutual fund or you cannot trade mutual fund in your FHSA. You can buy stocks, bonds, ETF, commodities, GICs, T-bills, things like that in your FHSA. Okay? Again, if you have questions, let me know. So, next, withdrawals from your FHSA. So, this is the moment that we have been waiting for. So, qualifying withdrawals from an FHSA are tax free. And what do I mean by that? Number one, you must be a first time home buyer. Number two, you must intend to live in the house or the home as your principal resident for 1 year from buying or building the house. Number three, you must have a written agreement for the purchase of the home before 1st of October of the year following the withdrawal. But there is also an exception to the rule, which allows you to still make a withdrawal within 30 days of moving into your new home. So let's say, for example, now you've moved into your home, but you've not made any withdrawals from your FHSA. You can still make the withdrawal from your FHSA tax free, provided you just moved into the home within 30 days. Okay? Note that you just moved into the home within 30 days. Also, don't forget what makes you a first time home buyer. In the beginning slide, we defined a first time home buyer as somebody that has never bought a house before or owned a house before in Canada, or you haven't bought or lived or owned a home in the past 4 calendar years. Okay? Next, let's compare the FHSA and the RRSP home buyers plan. While both the FHSA and the RRSP home buyers plan can help you save for a down payment, it's important to know the key differences. Number one, the FHSA, your annual contribution is $8,000. But for the RRSP home buyers plan, the contribution is based on your earned income. So for the RRSP, how do you know your contribution amount? It's usually the lesser of either 18% of your income from the previous year or the annual RSP limit. So the annual RSP limit is usually set by the government every year. So whichever one is the lesser of the two, that is going to be your contribution limit for your RSP and any carryovers from the previous year. So for simplicity, for the FHSA is just $8,000 per year for the annual contribution. For the RSP, it varies. Okay, and this is based on your earned income. Number two, the lifetime limit for the FHSA is $40,000. For the RSP, it varies. The limit varies based on your earned income. Number three, the withdrawals from your FHSA is $40,000 plus any investment returns, meaning that, so let's say for example you make a deposit of $40,000 into your FHSA for the next 5 years, and this $40,000 grew into $100,000. The extra $60,000 FHSA account is going to be withdrawn tax free. But for the RRSP home buyers plan, the maximum you can withdraw per person is $35,000. Okay, only $35,000. And for the FHSA, there is no repayment needed. But for the RRSP home buyers plan, you have 15 years to repay the $35,000 back into your RRSP. You can combine both the FHSA and the RRSP home buyers plan for your down payment for your house and any other associated costs with buying or building your first home. Okay, so you're not just limited to only using the FHSA or just using the home buyers plan alone. You can combine both, which is amazing, amazing, amazing. So now, before we wrap up, let's go over some key points, important things that you need to know. So, number one, closing the account. The FHSA must be closed by December 31st of the 15-year anniversary of opening the account, or when you reach 71 years old, or after making a qualifying withdrawal by December 31st of the following year. So, what does this mean? You're going to close your account based on whichever of this option comes first. Any unused funds can be transferred to an RRSP or RRIF tax-free, and withdrawn unused funds from the FHSA are added to your income for tax purposes. And what do I mean by that? If you don't use the FHSA for buying your first home and use it for something else instead, that amount is going to be added to your yearly income, and this is a taxable event. Next, transfers. Funds can be transferred from your FHSA to another FHSA or RSP or RRIF tax free. And also, it's important to know that once you make the transfer into a different account, it's going to follow the rule of the receiving account. Meaning that if, for example, you transfer some funds from your FHSA into your RSP, once you make that deposit into or that transfer into your RSP, it ceases to be an FHSA. Now, the amount that you deposit is going to follow the rules of the RRSP. Okay, it's important to know that, meaning that transfers from an RRSP to your FHSA are tax free, but it's not deductible, meaning that you cannot claim that on your taxes the following year. And also, it's important to know that this will not restore your RRSP contribution rule. Okay, if you have any question, just let me know in the comment section or just reach out to me. So let's sum everything that we've been talking about. What is the FHSA, the First Home Savings Account? This was introduced last year to help Canadian residents to save for a down payment. Number two, it combines the benefit of the TFSA and the RSP for first-time home buyers. And contribution to your FHSA are tax deductible and withdrawals are tax-free. And you can contribute up to $8,000 per year once the account is open. Remember, if you're planning to buy a house in the next 2 or 3 years, it's better you open the account right away so that you start accumulating the contribution room. And finally, the lifetime maximum contribution limit to your FHSA is $40,000. Now, you might be wondering, how can you open the first home savings account with the FHSA? The simplest way or the simplest platform to open an FHSA is with Questrade. Questrade is the leading do-it-yourself brokerage account with the lowest fees in Canada. I've been using Questrade for a number of years now and I love their services. It has a very robust platform and I highly recommend using Questrade to open your first home savings account. I'm going to leave a link in the description below where you can open your FHSA account. And even if you're not sure on how to get started, you can always let me know in the comment section below or reach out to me. Okay? So, next, I offer one-on-one personalized coaching experience. If you want to get started with stock investing, that's investing in the stock market or investing in crypto, or you're struggling with debt, you're trying to get out of debt, but it's been a struggle for you, book a session on my website, bloomingumoren.com or bloomingmymoneycoach.com. I'm going to leave a link in the description below. During each of this session, I tailor the coaching experience to your understanding. I explain it to you in a concept that is easy for you to digest. Go on my website, book a free session to get started, and you can also check out the reviews from my previous student. Take time to understand how money works for you. And the FHSA is one of the incredible tools that can help you save for your down payment for your dream home. And if you don't know how to do that, or you want me to coach you on how to do that, again, go on my website, bloomingumoren.com, and book a session right away. Okay? So next, I hope you've learned something new today. So now it's time to hear from you. If you have any burning questions or thoughts, drop them in the comment section below. I'm glad to answer your FHSA inquiries and I'm also happy to connect with you on any of my social media platforms. My handle is bloomingumoren. You can just reach out to me on my website, bloomingumoren.com or bloomingmymoneycoach.com. I'm excited that we're building a community of future home buyers. So thank you for joining me on this exciting FHSA journey, and I hope that you feel excited to save and invest for your dream home using the FHSA. Remember, your dream home is within reach. Keep saving, keep dreaming, keep investing, and happy house hunting. If you have any question, let me know. Until then, I'm Blooming Umoren, your money coach. Bye bye.